Okay, I guess I would like to talk a little bit about the financial markets, mainly the bond markets. And I guess I'll take a little bit of an unorthodox start because I'd like to begin with a couple quotes from James Carville. If you remember James Carville, the political strategist for Bill Clinton. And it's not because I always agree with his politics. I just think he's got a way of saying things every once in a while. And I can't do the Louisiana drawl at all, so we'll just start. And we're going to start with the classic. And the classic was how he shaped the issues around the election when Clinton was first elected over Herbert Walker Bush. His tagline, you remember that one? "It's the economy, stupid." That was his line to frame the issues. And I think that's probably worthy of reprise in this year in which we spent a year fighting over health care reform, and we're going to spend a new next year fighting over energy policy reform. Perhaps we've taken our eye off the ball. It is the economy, stupid. I'm sorry, it is the economy, revered Washington politicians. Why don't we focus on this a little bit and make sure we've got that right? The second quote is not so much of a classic, so I've got to read it. I've got to find it. It's from 1993, and it goes something like this. "I used to think if there were reincarnation, I'd want to come back as the president, or the Pope, or a 400 baseball hitter. But now I want to come back as the bond market. You can intimidate everybody." And the context with that was that inflation was starting to, there were signs of inflation. The bond market, the long-term bonds had moved back above 7%. And Washington was getting scared. The Fed might tighten. There's a lot of, the bond market was on its vigilante kick, and it was going to discipline profligate spending, and it was going to discipline bad policy. And I guess the reason I want to start that is because I want to talk about the bond market in today's context. But perhaps we shouldn't think of it as one big shop. I like to think of the bond market as a bazaar. And in this bazaar, there's a number of different stalls, each one for different sectors. And the sectors that are important to us are where we're financing our public debt, the U.S. Treasury market. You might also consider the sector that got this building built, the municipal bond market. The market that funds corporate America, the corporate bond market, either investment-grade companies or this very large, high-yield bond market. And do we talk about mortgages? That's what's driving the housing finance and letting housing transactions go through and refinancing go through. And then perhaps some markets that you're not all that familiar with, the asset-backed securities market. And also, I guess, and that's all the stuff that we're just talking about is, classic standard markets. And then we have some sectors that maybe got us into trouble with some structured finance. So a lot's going on. And if you were in the midst of this last year at this time, there's all kinds of crazy things were going on. The municipal market was shut. We couldn't fund the debt to float this building for a while. Prices were crazy. But perhaps more important, the corporate bond market was shut. There just wasn't any issuance in the third and fourth quarters. The asset-backed securities market, the market that had been driving your ability to take a home equity loan, finance cars, credit card receivables, student loans, that market was shut. So this was a very scary time, and it was a scary time not only for bond market participants and corporate management, but also for anybody who owns shares in those companies. If they're not going to be able to refinance, then you're going to be driven to bankruptcy. And in the fall and winter of 2008, the junk bond market basically, you think things were bad in equities. The junk bond market was pricing in a depression, absolutely pricing in a depression. And it was a scary moment, but we somehow survived it.